Okay, so welcome team again um, to our class right now. Um, it's hard to say this, but this is our final class for the free Forex class for batch number 2 for today. What we're going to be doing today is that we're going to do a quick recap, touch on certain areas that will go on. I really want to do a next chart with you guys and do some markups right now for this class. And I want you guys to as much questions you have and see whatever, if you're missing out something that you can actually jump back on at a later date, or now jump on it because you need to learn it. So we all cool here, we all one family, and we're looking into learning more. So the lesson today is just a recap, and we're going to be doing a chart and do some analysis and so on. And I think that would prep you to actually moving forward. All right. So yesterday, let me just go ahead and put this up here. So yesterday I looked at this chart yesterday, and this was a setup that I did yesterday, and we looked at how the market contracts, expand, and went into a trend, and then went back down into a bearish trend here. The reason why I did this trade is because here as well, we're looking at it from a perspective that the trade will go back down based on the retracement action that take place with price in this area. So we're looking at here, it will go all the back down to the bottom here. So it's going down. And this is the reason why I put this vertical line here. All right. Now, what I want to do is to do a fresh chart and then run through it one more time. So I'm going to put up a different chart. This is JPY, US versus JPY, US versus Japanese yen. And we had some markings on it, but actually I wanted to just clear the chart and actually just do it from scratch so you guys could just appreciate the lesson some more. Just take off everything, start from fresh, and how you guys can actually, learn what is in front of you from scratch, right? And how would actually do analysis as well yourself. All right, so this is a brand new chart, and we want to do some analysis. And do remember that price is always is what is moving the market. Do remember that within the markets you have different zones. You have lower zones, higher zones, and higher zones, and lower highs as well. Do remember that. I'm not just saying that, but I wanted to show you what I'm talking about. So for example, here, you have a low zone right here. And then you have here, it's a different zone right here that is taking place from here. Here. It's the next one right here. And up here, it's a different zone altogether up top here. And what we're identifying is zones, very important, support and resistance zones. And this may look very simple, guys, but this is some of the fundamentals that you need to get right. And I'm going to change all these colors here to white. Let's change the color to white rather than green. And what we're looking here is different zones, market structure that we're going to recap on right now. So when you look at a chart, I want you to be able to look and see different zones that play now. And do remember the bouncy ball. Here is a zone between here to here. That's a zone. Here to here, that's a zone. This is a next zone. Right here to here is the next zone, and then go all the way up here. Goes back down, come back down, and there's some sort of resistance right here. That's why it didn't go all the way back up. So there's a next zone right here. Right here, goes back up, and then it breaks, goes back down into a lower time frame, lower zone. So you have lower highs and lower lows. Okay, so if you're taking it from this perspective here, this would be the lower lows and the lower highs would be above. So each area, it is known as a zone, and price is happening. So imagine if the chart is coming from here and it starts here and it goes up. None of this existed, you know. None of this right here existed, none of this. So if you look from it from inch by inch, candle by candle, hour by hour, second by second, minute by minute, you will see that everything is precise. There's price happening. Goes up here, and then it goes back here. So there's be some sort of resistance right here. See it? Then it goes to go back down, and then it starts again, and it went back down. Breaks here, and break and go up. This is the break here. This candle right here. That's the breakout. And it goes up and continue up into different highs. And then it becomes higher highs. So you have higher lows, higher highs, right? And it continue up, goes down, bouncy ball, continue, and it breaks and went back down. All these areas, that's what I want you guys to know. These areas here, all these areas, let me write the word, X. All these areas here are known as zones. And within these zones, you have market structure and support and resistance happening right here, okay? This is a zone, 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 this is a zone. All these areas are zones. Zone, zone, different zones. Zone, right through. So that's how we're going to identify zones. All right, we got that. So we're going to move on. Do remember that now within the market structure, how the market is structured. Do remember that the market is moving, and then price is actually happening at any given time. And then price action, the action of price, moves the market up or down. That's what it's doing, right? So price, do remember that. And we can look at price from a perspective that even if we want to start here and say this here is price, look at price as the bouncy ball. You remember the bouncy ball. This is price, and price is moving these candles up and down, okay? Very important. So this here is price, and you can see I did a few charts like this and explain to you how price is actually affecting these charts. Also remember now that when price is happening, we have to do the analysis in how things move, but how the market is actually moving. What is happening with the market and how the market is moving, and how to identify the different areas within the market, how the market actually contracts, and you'll see it happening right in front of you. It contracts, indicates, confirms going to a trend. So it contracts, and it's always contracting, expanding, and then it goes into a trend. And you will see here, all of this is known as a bullish trend going up. Very important for you guys to do remember this right here. So identify the areas of when or what is doing. Change this. Bullish, contraction here. Contraction here. Contraction. This is contraction, actually. This is what's happening right here. Market is going actually crossways, not going up, not going down, it's moving across. Contraction, indicate, expand, go into a trend. Expand, go into a trend. And it continues from here, continue going up. Here you have retest happening, expansion, I went into a trend. All of this is happening. We'll go through all of this already. Just refreshing you guys. From here to here, went back into a different trend, a downward trend. So it's always playing out that kind of way in the market. As the sun comes up, sure as day. That's what's happening every time. Contracts, expands, go into a trend. Same thing here. Contracts, expand, goes into a trend. Same thing. And you will see that happening right throughout. Contractions, right throughout. You'll see it here again. Expand, go into a trend, and same thing. Goes back into a trend, retest, contracts, go back, and went back all the way down into a trend. Here again. All of that. Then you look along the chart, you see it. So once you can read the charts like that, you'll see right here as it relates to contract, expand, going to a trend, contract, and it's consolidating right here. That's what it is doing. See it? That's what it's doing. So look right through the market. That's what's happening. Same thing. So I want you guys to be able to just remember all this that I taught you guys. And you guys should be fine. There it is. There it is. Any way you want to look from whichever angle. And this is more bullish than bearish. So just identify the areas and you should be fine. Identify. It's good to identify. Goes back down here. And when these big candles comes into the market, this is all about institutional traders mopping up. Do remember that. Institutional traders mopping up. Mopping up dumb money, they call it. You'll see all of that happening right here. Right through. Bullish or bearish. Going down. Same thing. Okay. How would we take the trade? If we're going to look at the trade and want to take the trade. Let's use here as an example. If you want to take the trade. If you're in the market and you want to take the trade and you see this happening right now and it continues going down, how would you take the trade? Do remember that you put your stop loss above, up here. So up here would be your stop loss, away from the candle, at least 13 to 20 pips away from it. So you can use a crosshair here, measure in the opposite direction. It's about 30. So you can come down to about here, right there, somewhere about here. So this would be a stop loss if we're going to sell off this candle right here. And this would be a perfect setups in the market. So you got to look up for your setups. Just doing a little recap, guys. So this would be a stop loss here. And then do remember now, where would be your entry? Your entry would be here. So the first thing you need to identify, the first thing before the stop loss is your entry. Your entry. You remember, your first thing you're going to find is your entry. Where you're going to enter the market. Where you're going to enter the market. Entry. Your stop loss. And then all of this here will be your take profits. Very important. And then before you think about taking the trade as well, thinking about your risk to reward ratio. It's always risk to reward. So all of this, all the way down. So imagine none of this existed. Imagine none of this exists right here. All of this right here, none of this right here exists. All of this right here, all of these candles to my far right don't exist. Do not exist. None of this exists. Okay? Don't exist. Don't exist yet. So you're going to be taking off all your cream right here. All this is going to be your cream. So all these areas right here. Right here. These two candles. This one, and this one. Both these candles, this one and this one, is going to be your take profit. And you can take it all the way down, but your entry would have been here. And then now what you could be looking at is my risk to reward. So let's take this off. So we do remember that none of this existed, so we can actually move the chart this way. None of that existed over there. But you want to know how you're going to make your money from this. So let this remain like that. So let's do this very quickly. So your entry would be here. So this is going to be your entry right here. And I want to put it that big. And your entry will be right here, above that candle right here, this right here, that red candle right here, right here. It's going to be your entry. We got that. And your stop loss is going to be up top here. And this is for a sell trade now, guys. You remember this? So I did a few charts with buy and so on. So I want to do this one here. So you guys can have it to use it if you want to go back and watch it at a later date. When you get the hang of things properly, or you just want a point of reference if you want. I want to make sure that it's there for you guys to use it. There it is. So your stop loss will be here. So let's move this line here, shall we? Put it here because this is the first candle we're working on. So all this would be a take profit areas. All these numbers here would be take profits. So as you move this number, no matter where you move the number, on the same candle, you will see change over here. And that's the number would be your take profit number. Stop loss and your take profit number would be this. All the way down. So as you move along, you will see it. You're changing, keep on changing all the way down. Keep on changing and keep on changing all the way down. All of that is going to be your take profit. So that's why you will see that I put multiple entries on it. So when you see me do something like this, or you see me keep on doing something like this, you can put as much on it. And all of this is going to be your take profit, these numbers here. Now we get the idea, right? And then now we got to look at the risk to reward ratio. Imagine this candle, second candle didn't start yet, and you're working with your first candle, this one. What would be your risk to reward ratio? So if I was doing this trade, I would simply look here. I would simply just go like this. This would be my risk. I'm risking this amount of money right here for all of these benefits here. So let me change this color. No. And if you play it like this, guys, I promise you, you do a better trade every time. You will do a better trade. This aqua color here. So this will be my risk area. And let me put it there as risk. And that is what I'm risking. Risk. And all of this here will be my reward. So if you look at it, the thickness of what I'm doing, all of this right here, all the way down here. I don't want to put it on the candle, but I want to put it close by, right there. So in line with this here. So let me just take off a few of these so it looks more. So all of this would be a take profit. Go back to your entry here. That's your entry, your stop loss, and all this is your take profit. All of this will be a take profit from here to here. All of that. And this is what you're going to be risking here to make all of this right here. So you have to get your risk to reward ratio right. So this is going to be a risk ratio. And for this candle right here, it's going to be your reward. So now we can see it. This will be your reward ratio. So you have to have this correct. So you're risking this amount of capital to make this amount of money right here. All of this. And if it continues, which it did continue, and if you enter that trade there, you will be making this amount of reward. all of this here, from here all the way down here. You're making a whopping killing off of this trade right here. So your risk to reward ratio is pretty decent for persons who enter the trade here at the top of here. Very important. And that would be right here. That would be an entry right here. Right there. So your risk to reward ratio, guys, you can see it. So if you don't see setups in the market like this, guys, you may want to just like hold on and trade, man. Hold on the trade. You know, and that's what's up. Any questions? Do you guys understand? And this is known as a sell trade, by the way. You guys understand?
Yes, I get it.
You really do? Seems very simple, right?
Right.
Right. And this is known as a sell trade. This is actually a sell trade. And then you can actually measure it as well. Cross here. How much you're getting from this side, risking, versus you're going from here all the way down to the bottom here. It's quite a bit. That's about 144 pips or more. 147. Somewhere there. It's quite a bit. So these are things that you're looking for. Right? This is US versus JPY. And this market is very liquid, they call it. So you will hear this JPY, this term as well, very liquid market. I mean, there's a lot of money in this market. And there is a lot of money in this market. Guys, especially with this currency pair, there is. So you have to look up for your setups right here and how you can actually get it going. You have to look at it from that perspective, right? Right here. So these are the two candles that we're working with. This one and this one. And I can change this color to maybe yellow. Make it get a little bit more thicker. So you guys can see it. This candle and this candle. These two candles, that's what we're looking at. I'm gonna change this here. Right there, that's where it stops. Right there, precisely, somewhere there. You just need to just go down a little bit more, somewhere right here. Somewhere there. That's it. So take time to do your trade, guys, and do the right entry. Entry is key. Entry is key. You want to write that down as well. And look how the pattern. So we always look left to predict what is going to happen to right. Always go left to look what's going to happen right. Right. And that's pretty much it. as you go into the markets as well. And you remember that price is affecting the market at all times. Price. So if you take time to do your trade properly, your markups properly, and to identify the areas, you should be fine. Just like right here, what I'm doing right now. Fine tuning things and make sure that everything is precise. Precise. That's your entry right there. So you can see it properly. And that's the area right here above that. Okay. And I'm gonna change it to white to match the word in white. This word white, this disk right here that I created, you know that right here is entry, right above that red candle. So, yep. You guys know that's up here, you just stop loss. Just spend more time to practice. Once you start to practice more, you'll actually learn how to market charts properly and how you can actually do it for yourself and continuously doing it. It's going to take some practice, guys. I kid you not. So that looks better and it works better. It's more clean cut. You can see what is what is what, and so on. For these two candles right here, and you want to go into a sell trade right now. So I can actually move this here to say this is a sell trade up here. So it starts from here, here, and continue all the way down. Basically. And I can make this bigger, as big as I want it to be. And that is all my reward ratio right here. Very important. And that's it, guys. So congratulations, everyone. Thank you for having me. I will upload this lesson as well so you guys can have it. And it was wonderful having you guys for my 2 weeks, but we'll still be here and we'll still be learning. So for sure, let's continue. And I'll see you guys very soon as well. So I'm gonna miss you guys, but have a wonderful weekend and bye-bye, guys.
Bye, Kevin.
All right, cools, man. Cools, man. I'll see you guys soon. Bye-bye, guys.